Hey traders, going into the week of the 29th of December, 2025. Last week, the VIX moved from 14.91 to 13.61, telling us volatility is low and traders are largely complacent, with little demand for no-term protection. The US 10-year yield sits at 4.132% versus 4.149% last week. TLT continues to trade above its 30-week SMA and exhibiting a positive slope. Using Weinstein's framework, bonds look like stage 2, hinting at an advancing stage. Options sentiment data shows that total put-to-call ratio increased to 0.85 from 0.75 last week, while the equity put-to-call ratio edged up by 0.01 to 0.64 from 0.63. This shows investors are becoming slightly more defensive, with increased demand for downside protection, but not at levels that signal broad risk aversion or panic. Market breadth continues to improve beneath the surface. The percentage of stocks in the S&P 500 above their 50-day moving average is at 62.42% versus 57.45%, signaling strengthening short-term participation and improving momentum across a broader set of names. At the same time, the percentage of stocks in the S&P 500 above their 200-day moving average is 60.43% versus 58.05%, suggesting that the longer-term trend structure remains intact and is gradually broadening rather than narrowing. Additionally, over half of the index constituents, 50.2%, are now in stage 2 advancing phases, reinforcing that leadership is expanding beyond a small group of stocks. Improving breadth signals healthier participation and supports a market environment where selective, trend-aligned strategies have higher expectancy. Key takeaway: low volatility, improving breadth, and stable rates point to a stay-long, selectively hedged environment, not a short-the-market setup. This is data vesting, trading with science, not emotions.